Welcome to Talk Tickers. We're your guide through the market's key moments.
And today, we're really digging into argenx. Their Q3 2025 earnings call just dropped.
Yeah, a really pivotal one for the VYVGART franchise. Commercially, I mean, wow. But it also kind of sets up the big question for them now.
Exactly. So our job today, cut through the sheer size of the beat and figure out what really moved the needle this quarter.
And what the next catalysts are. What's priced in, what isn't, and what actually matters for 2026.
Right. Let's get into it.
Okay, results snapshot first. Because these numbers, they're big, way bigger than expected. Management really delivered.
They absolutely did. Product net sales for VYVGART alone, $1.127 billion.
Wow.
Yeah, their first billion-dollar quarter for the franchise. Huge milestone.
The total revenue came in where?
Total reported revenue was $1.13 billion. Consensus was looking for what, $917 million?
Huge on there.
So they beat by roughly $214 million, just blew past it.
That's a massive beat. And earnings per share.
GAAP EPS, $5.18. The street was at $3.56. So again, a really strong beat on the bottom line too.
And the growth rates must be pretty eye-watering.
Oh yeah, 96% revenue growth year over year, and even quarter over quarter, a solid 19% jump.
Okay, so financially, just a monster quarter. Nailed it on every metric.
By any standard, yes.
Yeah.
Exceptional. But here's the twist, right?
The market reaction.
Exactly. The disconnect. You have these massive beats across the board, and the stock basically flat, down maybe 0.2% on the day.
And that tells you everything, doesn't it? After the run, it's had, up over 37% year to date coming into this. The market has already priced in this kind of perfection for GMG and CIDP. It's not reacting to this news anymore.
It's all about what's next. Expectations are just incredibly high.
They need more than just great execution on the current business. They need signals about 2026, about the pipeline.
Precisely. So let's look at how they're funding that pipeline. Profitability, cash.
Right, because the operational leverage looked pretty good too. Operating profit was what, $346 million?
$346 million, yeah. And period profit, right there with it at $344 million. Really strong conversion.
And they're stacking that onto an already big pile of cash.
Huge pile. End of Q3, they had $4.3 billion in cash, cash equivalents, and current financial assets.
$4.3 billion. Okay,
Yeah.
So liquidity is definitely not an issue. Gives them a lot of flexibility.
Immense optionality, yeah. For R&D, maybe partnerships, whatever they need.
Okay, so where did the sales actually come from? The mix, still very U.S. focused?
Very much so. The U.S. brought in about $964 million of that total.
And that's still growing strongly.
Yeah, 20% quarter-over-quarter growth in the U.S.
Yeah.
And a big driver there is the pre-filled syringe, the PFS.
Right, the PFS launch seems key.
It really is. Management highlighted that over half of the patients starting on the PFS are completely new to VYVGART.
Oh, interesting. So it's not just switching existing patients.
No, it's expanding the market. And get this, over 260 new prescribers wrote their first script ever since that PFS launched.
Okay, so the PFS is genuinely pulling in new doctors and new patients. It's overcoming some kind of barrier, maybe the IV infusion hassle.
Seems like it. It's broadening the base.
Yeah.
And they're really cementing their lead in the approved indications, too.
Let's talk about that. GMG first.
15 straight quarters of patient growth in GMG. They're the #1 prescribed biologic, fastest growing.
And the interesting bit there for me was the shift earlier in treatment. What was it, 70% of new patients?
Yeah, 70% of new GMG starts are coming directly from oral therapies now.
Which is a big shift. They used to have to fail other things first.
Speaks to confidence, right?
Yeah.
The safety, the speed.
Absolutely. Physicians are clearly comfortable reaching for it sooner. Then you look at CIDP.
Chronic inflammatory demyelinating polyneuropathy. Still mostly IVG switchers.
So mostly, yeah. About 85% of the CIDP starts are patients switching off IVIG. But they are starting to see some movement with treatment-naive patients, which is important for hitting that full, 12,000 patient addressable market they target?
Exactly. Getting those naive starts is key long-term for CIDP penetration.
Okay, so commercial engine firing on all cylinders. How are they managing the spending side, the investments needed for all this growth?
Well, they did nudge up their guidance for OPEX slightly for 2025.
Okay.
Combined R&D and SG&A, they now expect it to land between $2.6 and $2.7 billion for the year, just a bit higher than planned.
But given the revenue beat, that doesn't sound like runaway spending, more like disciplined investment.
That's how they framed it, and it seems reasonable. Investing to support the growth and, crucially, to fund that packed 2026 pipeline.
Makes sense. And they're shoring up manufacturing too, right? with Fujifilm.
Yeah, expanding that partnership.
Uh,
Includes a new site in North Carolina. It's about de-risking the future supply chain, making sure they can actually produce the drug if these new indications hit.
Smart move. Okay, let's talk pipeline catalysts then. Near term first, seronegative GMG.
On track, they expect to file the SBLA, the supplemental application, by the end of this year, 2025.
And that's important because it opens up VYVGART to GMG patients who don't have the main antibody.
Exactly. These are patients without the AChR antibody,
Yeah.
often harder to treat. The filing is based on the ADTT serum data.
Which showed it worked across the board, even in the tougher subgroups.
Yeah, clinically meaningful improvements across all three main subgroups. The MuSK antibody patients, the LRP4 antibody patients, and even the triple seronegative ones who have none of those markers.
So getting that label expansion would be a significant win, tapping into a whole new patient pool for GMG.
A very meaningful one, yes.
Okay.
But, like we said, the real story, the reason the stock didn't pop,
It's 2026.
it's the density of that 2026 calendar. 5 registrational readouts planned for next year.
5. That's ambitious. What are the key ones again?
ADAPT-OCULUS for ocular MG, that's first half of 26. Then advanced next for ITP, immune thrombocytopenia, that's second half.
And management keeps talking about these new indications, Greaves. Myositis as potentially being as big as GMG itself. Each one.
That's the framing, yeah. Each one represents a potential MG-like opportunity. That's the multi-billion-dollar upside the market is waiting to see validated.
But they're also making some tough calls, cutting programs. That shows discipline, but also raises the stakes, maybe.
It does. They stopped Impassiprovart in dermatomyositis DM, citing enrollment challenges.
Okay.
And they decided not to move Agamot forward into phase 3 for lupus nephritis based on the phase 2 data.
So they're shelving potential drugs to focus resources.
Exactly. Prioritizing speed and probability with VYVGART over diversifying into other mechanisms right now, it puts even more pressure on those 5 readouts.
Makes sense. They're going all in on the core asset. Is that why they're accelerating Graves' disease so quickly?
Seems likely they're leveraging the connection to thyroid eye disease, TED, which they already have experience with, to move VYVGART straight into phase 3 for Graves early next year. It's aggressive.
Calculated risk, you could say. Focus the firepower.
Right. And speaking of focus, how about the competition? J&J announced that head-to-head trial. How did argenx sound about that?
Pretty confident, actually. Almost dismissive. They basically said they don't see it adding much value or differentiation for patients.
They're banking on their existing data package, the breadth of it, the safety profile, the upcoming label expansions.
To be enough of a moat.
That seems to be the bet, especially with their focus on seronegative populations, which they might think the competitor trial won't address as effectively.
Still, having J&J running a head-to-head, even if argenx thinks it won't differentiate, that could create some noise, couldn't it? Maybe slow down some doctors.
It's possible. It introduces a data point people might wait for, especially around payers or long-term comparisons. But argenx clearly feels their first-mover advantage and broad clinical data are strong enough.
Okay, let's pull it all together. Record quarter, huge beats, tons of cash, disciplined spending, a super dense, high-stakes pipeline for 2026, management sounding confident.
And yet, the stock price is flat.
So the message from the market is crystal clear.
Utterly. It's saying, we believe the current business is great. It's solely valued. Now prove the next act. Prove the platform story.
The focus is 100% on those 5 readouts next year. That's what unlocks the next level for the stock, if they hit.
Investors are just waiting for that data. Period.
Although, the analysts seem to believe it's coming. We saw those big price target bumps after the call, right? TD Cowen to $1,146, BOFA to $942.
Yeah, the professional analysts are definitely keeping the faith in the long-term story, even if the market is in wait-and-see mode right now.
Which brings us nicely to our final segment for today, and let's be absolutely clear here.
Extremely clear.
This is not financial advice. We're talking about the call, the data, the market reaction. This is for information, for entertainment. Always, always talk to a licensed professional before making any investment decisions.
This is purely a thought experiment, a way to think about how the market might be viewing things based on that intense future focus.
Right. So the trade idea pitch plays directly into the situation, the market looking past the amazing current results and focusing entirely on 2026.
The idea is that the market today is basically discounting that 2026 pipeline. It's pricing the stock based on GMG and CIDP continuing their current trajectory.
But the real value inflection comes if, say, 2 or 3 of those 5 big readouts next year are positive.
If that happens, VYVGART potentially transforms from a two-indication drug into a true multi-billion-dollar therapeutic platform almost overnight. That structural shift is the core bet.
So the outrageous but plausible trade idea. Use this flat price action now, this pause, as an entry window.
For what exactly?
To make a long-term high-leverage bet on that 2026 outcome, we're suggesting looking at deep out-of-the-money call options.
Okay, give an example.
Like maybe a $1,000 strike price, expiring way out, say, January 2027.
So well after all the 2026 data should be out.
Exactly. It's a pure play on the science delivering over the next, 14 months or so? High risk, obviously. Options are risky.
Very high risk. But if they deliver on those readouts,
the payoff could be exponential. It's a bet on management executing that dense calendar, backed by their huge cash pile.
a very focused bet on pipeline success.
Okay, so let's wrap up this deep dive. argenx Q3 2025, record-breaking quarter, massive beats on top and bottom lines.
Confirm they're investing that cash, but in a disciplined way, funding that incredibly important 2026 catalyst stack.
A stack that could fundamentally reshape treatment across several autoimmune diseases if the data hits.
So the final thought for you, the listener, to maybe chew on is this. They're clearly prioritizing things like Graves, myositis, accelerating timelines, even cutting other projects to do it. How quickly will the market actually price in that huge potential shift? From VYVGART being a big drug in 2 diseases to being a dominant platform across many. When does that switch flip in the market's mind?
Something to think about. That's all the time we have for today's deep dive. Thanks for tuning in while we unpack the argenx earnings.
Hope this gives you some useful context. We'll talk to you next time.